Hey everyone, welcome back to the Daily Gold Podcast. Today we're speaking with returning guest, my buddy Sean Brodrick. Sean is the editor of Red Hot Global Resources and also the editor of Global Resource Hunter, and you can find all of his work at uncommonwisdomdaily.com. And Sean, as we get started off, I know today was a tremendous explosion for precious metals, but let's start off with your comment on the valuations, because you sent me a chart yesterday. And I wanted you to share that with our listeners here, and maybe you can just explain what was in this chart.
Oh, you mean the must-see indicators on gold miners that I posted at uncommonwisdomdaily.com? Yeah, well, there were two. One is a chart of the CEF, which is a fund, closed-end fund that holds physical gold, and it seems to be putting in a double bottom. We have to see if it works out. But, if you want to talk about low-risk places to buy that kind of fund, it sure looks like one now, especially because, as of Monday, I haven't checked today, as of Tuesday, the CEF was actually trading at a discount to the amount of gold it holds. That's usually a sign of very negative sentiment, and you tend to find negative sentiment at market extremes. The other charts, which were in the column, are about Newmont. And Newmont's price to earnings is, or at least as of Tuesday, was near a 24-year low, which means people do not think that stock has a future, which is great. Newmont is the biggest gold miner in the world. Of course it is. And So it just shows the extreme negativity in that stock, and also its price-to-book ratio. Well, its price-to-book ratio is almost down at the lows that it hit during the 2008 financial panic. And it's not just Newmont. I mean, we are seeing this across the gold sector, and in fact, when I did a recent screen, I found about a dozen producing gold miners. I mean, these aren't explorers, these aren't even developers, these are actual miners that have real businesses that were trading at discounts to their price to book value. I mean, not only below book value, one was trading at like 0.4 of its book value. So it just shows you that the negative sentiment in the gold mining area is just really extreme, or at least it was earlier this week. Now, Today we had a big move up. I think there's a bunch of reasons for that, but one of them has to be because these stocks are so darn cheap right now.
Right, and Sean, maybe you can go into some of the other reasons that you that account for why today we had such a explosion, as I like to keep saying.
Well, there are a number of things involved. I think for sure one is the economic news that came out, which shows that not as many jobs are being created as people hoped. And so people think that opens the gate for the U.S. Fed to do some kind of liquidity injection when it has its meetings later this month. Now, it holds its meeting 2 days after the Greek election. There's a lot going on this month. And so if the Greeks reject the euro, or else who knows what's going to happen in Greece, because their polls keep changing from day to day. Personally, I would find it exhausting to live in Greece right now because of all the political upheavals going on. So we have the politics. We have the fact that people now think that there's a wider opening door for the Fed to inject more liquidity into the system, and once liquidity gets into the system, it has to go somewhere. And it often, in the past, has gone into hard assets, especially gold. And then there are other forces at play as well. One is we saw the big move in gold, and I have to say gold has really been behaving very well for about the past week. Even though the market sells off, we've seen people start to move into gold again. Now, for a while, gold had lost its safe status. We can argue about why that happened for like the next hour. Let's just say it lost its safe haven status. It seems to be regaining that right now. It's becoming more of a safe haven. And so as people are more worried about what's going on in the market, naturally they go to the places where they feel safe. And the only two places, well, I can I can actually think of about 3 or 4. One is certainly gold, one is the U.S. dollar, one is utilities, and one would be gold miners. So those are the kinds of things that are actually going up. Another thing that's doing extremely well, and I will mention this even though it has nothing to do with what you normally talk about on your show, look at the airlines, folks. The airlines are doing extremely well because the price of oil is going down. Now, here's how we bring it back to gold. What is a major cost for many gold miners? And that is their fuel input. That's a thing that they have little control over. Most gold miners do not actually hedge their fuel costs. So as the price of oil goes higher, it squeezes their costs, and that's part of what we saw crushing gold miners earlier this year. Now the price of oil is just tumbling. I'd say it doesn't have support until the high 70s. That's probably when we'll see OPEC step in and say, hey, we're not going to pump so much, something like that. But that's a huge relief for the gold miners, and that's really going to improve their profit margins. So that's something else we have to keep in mind as well.
Yeah, that's really an excellent point. If you look at the gold-to-oil ratio, it's really been it's made a nice bottom, I think, in the last 6-9 months or so, and in the last couple of weeks it's really started to surge and looks like it could potentially get back to those that early 2009 high, if I'm not mistaken. But Sean, moving on from that, let's talk bigger picture here. I've been trying to figure out, and maybe to a fault, if what we've seen here is the major bottom in the sector, that many people have been waiting for. And I think most would agree here that we have seen, a short-term bottom, probably at least a medium-term bottom, maybe even more than that. But what are you looking for as, we kind of progress here into the summer? Is it economic data? Is it central bank action? What are kind of the fundamental things you're going to be looking for that are going to tell you that, we have seen a major bottom here in the sector, or that, this looks like we could, retest the low and we're not out of the woods yet?
Okay, I will address that. I just will say we'll probably see the actions on the charts before we get the news of the actual fundamentals, because the insiders always know the real fundamentals before the rest of us. So I'm just going to touch briefly on the charts, and that is, despite the beautiful move today, gold has not broken its short-term downtrend. That is something to keep, and it has to get above 1650 in order to do that. And then just the downtrend from like August, that would be, it has to move above 1725. Those are some major overhead resistance marks we have to keep in mind. Fundamentally, what we need to see happen, we need to see more buying in India. Now, that might not happen until later this year, because we're almost out of the time of year when people in India actually use up more gold for all of their festivals and stuff like that. So that could take some time in coming. So while we're waiting on India, we have to see China pick up the pace. China actually, the amount of buying that they are doing through Hong Kong, which is one of the things we can measure. China also does a lot of things in gold next measure, because it's all secret and stuff. But through Hong Kong, there have been hints that that's been slowing down. We need China to pick up their pace and just make up the difference for what's going on in India. And along with that, certainly the buying by the central banks has been great. It's been extremely supportive of the market. We probably need to see more of that. I think we will, simply because of all the instability and the volatility going on with the euro right now. Now, the euro had a little good news today that, in fact, sent it higher, which is that they had a vote in Ireland, and Ireland wants to stick with the Euro Union, and so now they have to find a way to move forward from there. So that's one little piece of good news for the euro. However, that does not change the bad news in Greece, does not change the worsening news in Spain, that doesn't change the just the big bad wall of voodoo that's about to hit in Italy. There's a lot of stuff that can go wrong in Europe, and Europe seems to lack any real decisiveness to deal with these issues. They only do things when they're pushed into them, much like the U.S. Congress, for that matter. So we need to see some kind of positive action in Europe. That would probably start to weigh on gold. I don't expect to see that in Europe. I expect the problems with the euro to keep getting worse. On a simple chart setup, it looks like the euro is going to go to parity with the U.S. dollar again. Huge move. And if you want to get short the euro, I can tell you my subscribers are short the euro. So I think that's a big move. Of course, you want to wait for some kind of pullback or some kind of a correction in the big trend, but that looks like that could be the defining trend for the rest of the year, unless something miraculous happens in Europe. And problems with the euro should be bullish for gold, so we'll have to see how that plays out.
So does the outlook for gold and gold stocks for the rest of the year, how much do you think it depends on if they can decouple from the euro and follow the dollar and U.S. bonds higher? I mean, if we see that decoupling, is that a really good sign for precious metals?
Well, but like the great Yogi Berra said, it's tough to make predictions, especially about the future, right? I hate making a forecast for gold for the rest of the year. I do believe it's going higher. The big trend has not broken. In fact, I'm having a Q&A and strategy session for my Global Resource Hunter subscribers on Tuesday. And I have a chart that I'm showing them that just shows how the big trend in gold has not broken. This is a chart that I got from my friends in Chicago who trade gold for a living, and it's the one they use for their big bets on like big trends. And the big trend in gold has not broken, and so when we get pullbacks like this to its 20-month moving average, which is one of the things we use, in the past, when it has pulled back to that monthly moving average, and then actually held that, which seems to be what it's doing right now. We have to see how this month ends. But that has been in the past a tremendous buying opportunity. But I can't emphasize enough, I'm not getting ahead of this. I've been trying to catch so many falling knives that I don't have any fingertips left, right? I mean, I have my long-term core positions, which had a great day today, but I got stopped out of a bunch of stuff that I bought because, hey, it looks like we hit a bottom. We didn't hit that bottom. So I'm waiting for the charts to tell me that, we've really made the turn here. If you want to try and jump ahead of this, go for it. It's just that I'm going to be waiting for a while longer. There are other things I can do in this market, make some good money. The euro is one example of that. There are great ways to make money in this market now. It's just I haven't seen that signal in gold that tells me now's the time to get in. So I think what most people should be doing is making a shopping list. I mean, mine looks delicious right now, especially with the pounding these things have taken. They are so close to their book values or even under their book values that, I mean, when was the last time we had this happen? But I don't mind waiting a little while longer because that will be there, and I just need to catch the big part of the move. I don't need to catch the first part of the move.
Right. Now, speaking of that shopping list, any possibility you could share just one item on your shopping list?
Well, no, but I will tell you something I have in my portfolio that you probably like that just looks great, which is Brigus Gold. Have it in there now. It was up 9.6% today. And the beauty of it is it seemed to have just popped it above near-term overhead resistance. So I may be adding to this one in the future because I only have a small position in it. And we did buy it when it was cheap. It was one of those things I picked up because I said, well, it can't get any cheaper, and then it did, right? And then I had my panic attacks. But now it's just popped up higher. Brigus is a really interesting company because this is a gold miner, a producing gold miner you can buy for under $1. And it has new management. They came in, took a company that was not working, and they seem to be making it working. And that's one that's listed on U.S. exchanges. The symbol is BRD. Like I said, I own it, so I'm talking my book. But that's one that I may be buying again simply because at these prices, it is dirt cheap. I need to see more positive action on gold. Now, it is true that miners usually lead the action in gold. So we might see a signal that it's time to pick up the miners before it's we get that signal on gold, and I'll probably act on that signal. It's just I won't be adding the bigger positions until I get the confirmed move in gold. So, I might pick up some small positions in this and like other things as well. And I think other people should look at stocks like that. Do a simple stock screen. See which miners show up at like price to book value of 1.5 or less. And, that's a lot of stocks, but you can pick out which ones in there, have new projects that are coming online, are adding to their resources, and have smart management that are not diluting the stock, which are 3 things that I like about Brigus. And so you can put those kind of criteria together, and you can really get some good-looking names there.
Okay, Sean. Well, I'm out of questions for now, but how about you give us any final thoughts you have on anything we've yet to touch on?
Yes, and I can tell you I've been receiving lots of questions from subscribers for the Q&A we're having on Tuesday for Global Resource Hunter, and so many are about gold, and I understand it completely, and so many people are so frustrated, and I understand that too. And your subscribers right now may be extremely frustrated about gold, and now they've seen this move today and say, finally, is this the light at the end of the tunnel? It might be, but here's the thing that I want to tell your subscribers. There are other places to make money in this market besides gold. You can't limit yourself to that. I plan to make a lot more money in gold this year. I plan to make money in silver. Silver may underperform gold for a bunch of reasons. We can maybe talk about that on the next show. But I mean, there's a lot of money to be made in gold this year. But do not obsess about that so much that you miss the other things that are moving around you. Airlines are one thing I just mentioned, and I'm sure you probably don't have to put airlines into your portfolios. But if the price of oil is going lower, and I believe that it has lower to go yet, then there are stocks out there that are just going to coin money because they're so leveraged inversely to what goes on in the oil markets. And there's a lot of stuff going on like that. There's a lot of places to make money. I know what has happened in gold has been rough on all of us, but you just have to buck up on that end and know that you're going to make money on it later in this year. And in the meantime, there are plenty of other places you can make money as well.
Okay, well, Sean Brodrick, you can find him at uncommonwisdomdaily.com. Sean, thanks so much for joining me today, and all the best to you, and hope you have a great weekend.
It's always a pleasure It's always a pleasure to speak to you, Jordan. I love your stuff. People make money by listening to you, and I hope there's some great things coming for you.
Oh, thank you very much, Sean. It's very kind of you to say. I'm a huge fan of your work also.